But we have tonight, I'm going to introduce you to some of our partners. And it's an opportunity for you to really get to know them a little bit and to really have a little bit more time to ask questions about what they do and how it fits in. And so in 15-minute intervals from 6 o'clock until 6:15, we have Brian Allen, who is here with us now, and I'll introduce him more fully in a second. But Brian is with Carnegie Title, and he'll talk a little bit about Carnegie Title, who we are, what Carnegie is, why title insurance is so important, how it works, and answer any of your title questions. Then at 6:15, we're going to have Bill Thompson from the 210 Home Warranty Company come on and talk a little bit about home warranties, how they work, how you put them in place, what's covered for buyers, what's covered for sellers, what kinds of expenses you can expect, who pays and when, that kind of stuff. And then at 6:30, we have Tim Fox, who is with Carnegie Home and Auto, which is the insurance company that Keller Williams works with. And he'll talk a little bit about the home insurance, not only for your buyers, but even for yourselves and how that works. So that's where we're going to go tonight. It's really an opportunity for you to meet some partners and to build out your team. And I do recommend, guys, that you get really purposeful about kind of building out your team. And you know what? One of the things that we always say is, from a compliance standpoint, I know that your brokers say that anytime that you give a recommendation or a referral, give multiple names and all that stuff. And there's some CYA in that, right? You don't want to be just giving out one referral, and if that doesn't go well. However, we do have preferred relationships for a reason. We've gone out and we've created partnerships with some of the folks that are the very best of the best. And we want to just keep those folks in front of you at all times. So here's tonight your chance to ask lots of questions and start to get to know some folks that you can have as part of your team. So without any further ado, let me introduce to you Brian Allen and tell you, how long have I known you, Brian? We go back a few years at this point, right?
I don't know, like 15 years, 11 years. Feels like a day, Hal.
I was just going to say, it just feels like forever to you, right? So Brian is with Carnegie Title, and Carnegie Title is actually a title company that has a strong relationship with Bergen County Partners, and I'll let Brian explain that. But Brian, why don't you introduce yourself to folks who don't know who you are tonight? This group is our Career Builders group. A lot of folks in this group are dual career folks. They have other jobs by day doing real estate around the edges of those jobs. And we have some folks who just find this is a more convenient time block to come to class in. But I think there's a lot of folks here who never get to see you at team meetings or any of the other places where you show up.
Yeah, well, I wish I got to go to team meetings again, and hopefully someday we're not too far off from that. Excuse the sunglasses, but I am driving right now. I'm on my way back from a closing, but I would never want to let you down, Hal.
All right,
you can hear me okay, right?
Yeah, perfectly.
Okay, good. All right, so Carnegie Title, we started Carnegie Title as a joint venture in 2015, and I had been working with the Bergen County Partners since they formed in 2011 when that Ridgewood office had originally opened. So I go way back there too. So and it's not something that I say just to say that because I'm the old guy and because I've been there from the beginning, you have to use me. I mean, I have to earn my keep, and that's making sure that agents understand how the title works, the title end of it goes. So understand that, I'm sure all of you understand that title is on the buyer's side, and what it does protects the buyer. It gives them making sure that they have clear title to the property. So we work with buyers' attorneys, we work with buyers to get that accomplished. So typically the way that it happens is title gets ordered after it goes under contract. And so that's when the time for you. So you go, you're in attorney review, and then it comes out and goes under contract. And that's when you would want to introduce me to the attorney or that you're working with, or use our preferred attorney list, which everyone should have access to through their individual market centers. And to make it sound really simple, it's 7 words. It's please use Carnegie Title on this transaction. So that's the simple part of it. And any version of there that you would use with the attorney would, and I've seen it happen now with agents that don't have relationships with an attorney, and it's just you're using your preferred partner and to make sure that your client is gets good service.
But Brian, I want to just unpack this a little bit, because title is just one of those aspects of the real estate transaction that sometimes happens outside of the agent relationship. You know, the lawyer orders the title, they get the title report. What exactly does a title searcher do? What are they looking for, and why does it matter to a buyer? You say clear title, but you know, it's been a while since some of us have been in real estate school, and I teach the pre-licensing class all the time online, so I think about this all the time, but I know most agents don't. What's the implication to a buyer if they buy a home and title has got a problem?
Well, if understand that a title search, we do a title search, which means that we're going into the county. We're going to check federal, state, and local levels, county levels, for anything that is against the property. So the seller, when they sell the property, there's certain things that could attach to that home, meaning judgments, government, IRS liens, or anything like that. So we go in and we make sure that the buyer is not going to have any problems going forward. So when it closes, we make sure that they have absolute clear title. It's their property. So that's basically how it works as far as what we do. Now, there's all kinds of talk out there, and they say, oh, well, the title came in or the title's in. Well, that doesn't mean that it's necessarily ready to close, because there's all kinds of things that show up on that title. So on a given property, with a normal property, is going to have a mortgage on it, say, and there may be a second mortgage on it. So so those are normal things. So we would just require that, we would pay off that mortgage when it closes. So we would get the payoff from the lender. We make sure that that payoff gets sent to that lender, so that enabling the buyer to have clear title. So so that's the normal stuff. But what about when there's an IRS lien, or what about when there's a mortgage that was from the previous owner? Or today I saw one that was from the previous owner and the previous owner before that, there was still an outstanding mortgage on it. So we need to get that stuff cleared up, because that's how the buyer gets clear title to the property. And it's hard to communicate this to the buyer. They don't understand. They just look at us as the necessary evil, or the ones that are causing the problems why they can't close. So but that's it in a nutshell.
So, Brian, they go out there and they do the search, and they say the title's clear. There's no liens or judgments that are going to be a problem that the buyer's going to inherit. And then what's all this about title insurance then? Who are you insuring, and how does that insurance policy work?
Well, the insurance is a one-time policy. Okay, it's a one-time fee, and that protects you, the homeowner, from anything happening prior to that day. So every other kind of insurance, you buy car insurance, and it protects you from today forward. Title insurance protects you from today backward. So so we're making sure that when the grand niece of the grandfather that owned the property originally left it to her in the will, that comes to us. I mean, we would have to pay that. So that's what that insurance is for.
So if there's any kinds of lien or judgment or problem that comes after the fact, and you've said that the title was clear, you issue these insurance policies, so you're going to make sure that that gets resolved and the buyer doesn't have to worry about it. So let me ask you this. Please use Carnegie Title on this transaction, those 7 magic words that we ask the lawyers, because the lawyers are the ones typically ordering title, right?
Correct.
So we ask them to use Carnegie Title. And what if the buyer says, well, I've talked to several different lenders, I've shopped different rates, maybe I just want to shop my title companies too. What would you say about that?
Well, I encourage everybody to understand what they're paying for and what the costs are. But with title insurance, it's our fees are set by the state. So the Department of Banking and Insurance actually controls what our fees are. So there is a set fee for whatever the dollar amount is. So, and it goes off of the sales price. So there's 2 policies that get put into place if the buyer is getting a mortgage. So the first policy would be to protect the buyer, And then the lender, of course, wants to make sure that they're protected as well. So that the difference is it's $25. They do what's called a simultaneous policy. So they both get done at the same time.
Okay.
Yeah, but they're all set by the state. So all title companies should be charging the exact same amount.
So it's not something that it pays to shop because it's going to be the same price from A to B to C.
It's going to be the same price. There may be things in an estimate that one lender or one title company gives you, but I'll go toe to toe with any other title company as far as what the actual fees are.
Guys, What questions do you have for Brian and title that, I know you've all been thinking all weekend long, there's this nagging title question and I can't sleep at night thinking about it. It keeps me up. What's that nagging title question that you have for Brian that you can put out there that he can answer for you today?
So if it comes back with something on it, then where do you go?
Well, if it comes back with something on it, so let's say, like, for instance, the example that I gave with the previous mortgage, I didn't fall out of the car. So it comes back with that a previous mortgage on the property. So we would then go to the previous title company and ask them for their proof or their back title to show that that has been cleared. So we do it that way. If there's something like a judgment or something, let's say there's an IRS lien, just had that yesterday, $50,000 IRS lien. So that has to be paid out of the seller's proceeds before closing or at the closing, but whichever the case may be. Does that make sense? Does that answer your question?
Yes, thank you.
Yeah.
Mm-hmm.
And I guess one more question, Brian. So we have this relationship with Carnegie and Bergen County Partners, and there is a side benefit to us in our market centers when we use Carnegie Title and not XYZ Title. What's the benefit to us as agents in our market centers of using Carnegie versus another company?
Oh, that's a good question, Hal. So Bergen County Partners is actually is Carnegie Title's partner, and they actually get distribution. So they're a shareholder in our company, and when the distributions are done on a quarterly basis, each one of the market centers is actually one of those partners. So there's also agents that are a part of this, and we do offerings there's another offering coming out, I believe, the end of next quarter. And that's where we give agents that are working with Carnegie Title the opportunity to buy shares in it. So it's not like there's, like where you hear like, oh, they give you, we'll give you $200 for each transaction you send our way. No, this is actually distributions. You actually, you buy those shares and you get those quarterly distributions, and that's a distribution of whatever the net profits are for Carnegie. So,
and I'll get to Dan's question in just a second because I saw Daniel raise his hand. But the thing that you guys need to understand as agents in these market centers, when the market center gets distributions based on the profitability of Carnegie Title, that all rolls into the money that the market centers have to run by. And what that means is there's more money to pay staff, not me, but pay for the people that are like your agent services people and people that otherwise we may not be able to afford. And because that goes to profitability, because we are a profit sharing company at the end of the month, the more profit is left over, the more we distribute to our agents. So there's a real upside of using Carnegie Title from the standpoint that not only do they provide great services, but because that money stays inside the company, the profit stays inside the company, we can provide a lot more services to you as agents that would otherwise have to be paid for. And it hits the profit share for those of you that are earning profit share as well. Daniel, you had a question. You raised your hand. Why don't you go ahead and unmute yourself?
Yeah, two questions. One, where in the buying and selling process does the title insurance company come in? And secondly, if there are liens against the property that you find, is that then an additional fee tacked on to that?
Let me ask the second question first. So you asked about an additional fee that would be tacked on. No, it's an obligation that we're showing as the seller's obligation, so that it's the onus is all placed on the seller for them to provide to clear that up before the closing. So, and that's part of the contract that you're signing, is that the seller does agree that they can provide marketable title to the buyer. So, and as far as the when does it all come in? It happens right after attorney review. So once it goes under contract, that's when usually the title companies will step in to order the title and make sure that we have everything in time for a closing. So there are a lot of attorneys out there that will make sure that home inspection issues have been cleared before ordering title, and that there's a mortgage commitment with the mortgage, if there's going to be a mortgage on the property. So that's a little, in my opinion, that's a little bit old school. I mean, we do want to have home inspections cleared, because that's where we there seems to be problems in those areas. But they don't want to order it prematurely and have the expense placed on the buyer. So and that's typically how that works. I hope I answered your questions.
Yes, you did. Thank you very much.
All right,
You're
guys.
welcome.
Brian, are you in a place where you can put your contact information into the chat box for us?
I cannot, Hal. This is
All
the
right,
first
then
time I'm trying to Zoom on my phone.
I will go ahead and get your email address and cell phone number and put it in there.
Great.
And that way,
And ask me, yeah, if you have any questions at all about it in the process, please just give me a shout or send me an email, and I'll be glad to respond to you and help you understand what it's like, what the title world is like. So.
All right, Brian.
Okay.
Appreciate you. Thank you
Thank you so much, guys.
being here with
Thank
us,
you.
answering all of our
You're welcome.
pressing title
You're welcome.
questions. I can tell you
Yeah.
there's one other thing, just as a sidebar. Brian handled the closing for a property that I purchased, and I've dealt with Brian at the closing table, and I can tell you he's a real pro. Handles it, makes it super
Thank
easy
you.
for the attorneys and for the paralegals. And
Thank you, Tim
again,
Fox. Yes, Tim Fox put my number in there for
there
me.
you go, Tim. You're the man.
Yeah.
Thank you, sir.
I'm happy to do it, Brian. I'm happy to help.
Oh man, thank you so much. Thank you.
And the last thought on this is,
Who
guys,
is that?
when the fee is the same between title companies, the way you separate yourself is by providing better service. And Carnegie is one of the fastest growing title companies in the area because they do a great job, and they communicate well. So his information is right there in chat. If you have any questions for him, I'd encourage you to reach out to Brian. Thank you, sir. I'll let you get on your merry way.
Thank you very much, guys.
Car.
Thank you. Have a good evening, everyone.
And
Take care.
next up, because we're running back to back today, we're just kind of running like a machine today. We're introducing folks. And so next on my list is Bill Thompson, right? So Bill Thompson, who is with 210 Home Warranty. And talk to us, sir. Tell us who you are. Tell us a little bit about the warranties that you offer and how that could be beneficial to the agents and the families that we work with.
Sure. Well, good evening, everyone. And thank you for the introduction, Hal. My name is Bill Thompson. I am the account executive for 210 Home Buyers Warranty. A little bit about me. I grew up in the real estate industry. Both my parents are real estate agents, kind of in my blood, and I've been in home warranty for about 10 years. And then 210, we've been in the real estate warranty world for about 45 years. We started in new construction home warranty. So you may know our name from there. About 7 out of 10 new construction homes that are sold are with a 210 home warranty new construction. And then we've been in the resale side of things for about 35 years. So some of you might be well versed in home warranty, maybe not. So just a quick, what a home warranty does. We cover the major mechanicals in the home. So I always like to use the acronym, we cover your peach. So your plumbing, electrical, appliances, cooling, and heating. Your peach. So people tend to remember corny. So cover your peach. It's a great tool when utilizing it, and it's available for both your sellers and your buyers. What's great about our program, if you're taking a listing, and I know listings are the name of the game right now, and they are very scarce, but there is truly complimentary, no fee collected coverage for all of your listings. So how does that work? Well, we will cover the home during the listing period free of charge. All we ask is that it's presented at, once you have a buyer lined up. And if it is transferred over, that's when it's paid for. But if it cancels out or it gets written out of the contract, the home goes off the market, we do not charge for the product, even if the client used it.
So let me be clear on that. I want to make sure that we're all clear on that. You say complimentary coverage now. So when I list the home, And I'm not sure if we're going to offer this as a perk to the buyer, but we're going to cover the home while it's listed. The hot water heater breaks. And now you come out and under the terms of the warranty, you repair or replace or whatever needs to happen. Now the home warranty is taken care of again. And that doesn't get paid for until at the closing, correct?
Correct. Yes. The only time we collect the fee for the home warranty is at closing, if it transfers to the buyer. So we don't say, if it cancels out in our system, we don't say, hey, Mr. Seller, we need that $530 for the warranty since you used it, or hey, we need that hot water heater back that we gave to you. It truly is risk-free during the listing period. And it's a great way to set yourselves apart in the marketplace as well, because we are one of the few providers for home warranty that has that complimentary coverage. So when you're going out on a listing appointment, you can say, I've got an exclusive home warranty program that is complimentary to you during the listing period. So heaven forbid something does go wrong, you don't want to spend any more money on a home you're not going to be living in much longer. Or a buyer is going to have a home inspection. Some of those items might be included. And let's utilize it as a negotiation tool with a potential buyer. You know, if they are asking for a concession on certain items that need to be fixed or at end of useful life, as most home inspectors like to say, instead of saying, okay, we'll give you credit for such and such dollar amount, at that point, let's transfer the warranty over to that buyer. You know, might be saving your client potentially thousands of dollars in concession costs. And on the flip side, if they don't need it, if it's not going to transfer over to the buyer, at least they have the peace of mind and we do not charge them. So
when we transfer over to the buyer, and let's say we do this inspection and again, things are working, right? But they're near the end of their useful life. This is what my daughter thinks about me some days. But anyway, they're still working, but near the end of their use, but they're not broken. Okay. What happens if the inspection finds that it's just broken? It doesn't work because it's been damaged somehow. How does the warranty help with that?
Sure. As long as there's coverage already on that home, you know, you took it out during the listing period, you have the home inspection. If there is a failure that comes up because of that home inspection, that's where you call us. You can utilize us. And what's great is that we're a one-stop shop. So your client would give us a ring. Our call center is available 24 hours a day. We also have a portal that they can set up online. We'll dispatch a local technician to come out to the house to make the diagnosis on the system. At that point, we get the information. Does it make more sense to repair it? We do try to repair first. If we can't repair, we move to system replacement. And I look at home inspections all the time. So if you do take out the home warranty with 210 on one of your listings and the buyer is comfortable with me looking at the home inspection, I know what's going to be covered and what's not going to be covered. I've been doing this for 10 years. It's hard to stump me at this point. If you can, I will send you a Starbucks gift card, coffee on me. But I'm happy to look at those because there is a deductible. Just like, you know, your car insurance or your homeowner's insurance, home warranty has a deductible as well. It's a small fee of $89. But if something's not covered, you're still paying that $89 because somebody came out to make the diagnosis. So I'm happy to look at the home inspection, say, yes, call in these 3 issues. Don't call in these other 2. I know they're not going to be included. Let's save your client some more money there too. So that's how that would work in terms of the home inspection. Now, on the flip side of that, and I always warn this, if you're representing the buyer and there's a home out there that they're looking at, they put a contract on to get the home and they go to home inspection and things pop up and that seller says, oh, we'll just give you a home warranty, no big deal, and there's broken items and there's no warranty on there, run for the hills. Those are pre-existing conditions. Just like getting into a car accident and putting on insurance the next day, that's a no-no. Same thing with home warranty. So as long as the warranty's on there before the home inspection, wonderful, and the coverage is available.
Yeah, just like healthcare, right? If you have the insurance before the diagnosis, you're covered. It's hard to go out after and get the coverage to cover, right?
Exactly.
Guys, what questions do you have for Bill about home warranties, how they work, how to introduce them to buyers and sellers, what kinds of paperwork's involved? What questions do you have? You've made it so clear, Bill. It's amazing.
Super, you know, I mean, all warranty gurus here tonight. Yes. Well, any question that y'all might have, I'm always happy to help. You know, especially like I said, in today's market, setting yourselves apart or setting your buyers apart too is super important. So I talked about the listing coverage and that complementary. You can utilize it again with your buyers. So if your buyer's looking at an older home and they're willing to purchase a 210 home warranty at closing, you can write into the contract to set them apart that my buyer's purchasing a 1-year 210 home warranty at closing. We would like to extend that coverage complimentary to your seller up until closing. So I've had a lot of great success throughout my whole territory with agents utilizing it in that way to set their buyers apart. You know, because
this is the first time I've ever heard this in 18 years in
yeah,
my career.
Yeah.
So the buyer is offering to cover the seller from the acceptance of the contract until the closing?
Exactly.
Oh my
so
God.
It's throwing that complimentary listing coverage on its side and utilizing it in a different way.
I love
so
it.
If the buyer, you know, buyers are coming, you know, $10,000, $20,000, $30,000 over ask. So they're coming out of pocket more and more. So there's even more so a value of having a home warranty because their discretionary funds are less. So instead, you know, yes, maybe they're coming instead of $10,000, they're coming $5,000 and they're writing into the contract, we are purchasing a home warranty at closing. We would like to extend that coverage free of charge, complimentary to your seller up until settlement as well. And if, again, that deal falls out of escrow, falls apart, nothing's been collected yet. So we can cancel that warranty too.
Another way to make your buyer's offer look attractive in a competitive market. You know what, Bill? I'm telling you, I've never heard that done. I love that idea.
Yep, just trying to think outside of the box, just putting my realtor cap on and, you know, trying to get your buyers the home. I can't say it's going to work every time, but I have gotten a lot of good success that agents have called and said, hey, that helped get the house. Because it just made that seller say, oh, wow, now I'm getting all of this coverage. I'm not paying anything. So
let me ask you one last question, and it's kind of my broker hat, right? Because I used to own my own real estate brokerage, and I've managed real estate brokerages. And one of the things which comes under the CYA and make sure that we're protecting ourselves, if I talk to the seller about this warranty and they say, nah, we don't want it, we're good, what should I get them to do to document that?
Yes, great point to bring up. So if you are presenting it to your seller or to your buyer, really what you present to one, you have to present to all in the real estate world. If they decide to decline on the home warranty coverage, there is a waiver that you want them to sign off that you did present it. It is available on our application page, which are on your online forms. There's hard copies in the offices as well. It's at the bottom of the application that you at least explain the home warranty. And at that time, they declined coverage. Super important for your risk management because heaven forbid, 2 weeks later, they're on the market, hot water heater springs a leak, and they talk with their neighbor and the neighbor goes, well, did your agent tell you about a home warranty? They're going to conveniently forget that you ever spoke about a home warranty. And that's a risk to you. So instead of them, you know, a potential lawsuit situation, you can say, no, we spoke about it. You declined it at that point. That's protection for you as the real estate agent.
And you have a paper trail. At the end of the day, if it's not documented, it didn't exist, right? So guys, I'm just going to share with you personal knowledge that I have of an agent who was actually sued for just this reason. It was the lack of introducing it. And this is a person who had introduced it before. It just wasn't part of her checklist of things to do. And she just forgot it. And she forgot to introduce it. And she was actually taken to court. And the lawsuit got crazier because the allegation was the reason why you chose to not tell me about it and you told other people about it was because of my ethnicity. And now you've got something that really gets ugly. So just teach it, to introduce it to everyone. No hard sell. Trust me, these things have a way of selling themselves. Complimentary coverage has a way of selling itself. No hard sell, but if they don't want it, get them to sign the waiver.
Exactly. Even if they want to think about it, because sometimes it's out of sight, out of mind. So even if they want to think about it, you can leave the brochure with them. What's great is that application page just tears right off. And at least then you have the waiver in your hand. So that is important even if they want to think about it. And again, that acronym, that lovely acronym PEACH. So it's the plumbing, the electrical, appliances, cooling, and heating.
Cover your peach.
Your PEACH.
We're not gonna talk anymore about that. That sounds like something that we should be talking about.
You'll remember it though now.
I'm gonna remember. That's true. Any other questions that you have for Bill and home warranties? Bill, if you'd be so kind also then to put your contact information into chat.
Of course.
I can tell you again, firsthand experience, had an opportunity to take a listing recently and we put a home warranty on it and Bill was super easy to work with. And we're hoping that we don't need to use it, right? We haven't closed yet, but that complimentary coverage is there.
There you go. There you go. Yeah, anything that anybody might need, please feel free to reach out anytime. And I'm also happy to speak with your clients. You know, like I teased, home warranty gurus, you're here to sell real estate. So anything that I can do to help with home warranty, happy to. Okay.
Thank you.
Well, thank you so much.
Thank you, everyone. Have a good night.
You too. Thank you.
All right, next up on the agenda tonight, Mr. Tim Fox, Carnegie Home and Auto. So Tim, this is our career builders class. A lot of folks here dual career. A lot of folks, realtors around the edges of another full-time responsibility. But I'd love for you to introduce yourself. Talk to us about home and auto and why Carnegie should be who we use.
Sure. Excellent. I appreciate it as always, Hal. Hal has me on a lot of these events, and it's always it's exciting to see the newer agents plus those folks who I don't usually see in the market centers or the other Zooms. So thanks for your time, Hal. So we launched with Al and his group in all the market centers in August of 2018. It's essentially an in-house insurance agent. So our role is to simply assist you and your valued home buyers with a free look at home insurance quotes. Reason being, as most of you are aware, you cannot close on a home if you have a mortgage without home insurance. The lenders will be hounding, the home buyers for the evidence of insurance, usually about 2 weeks out from closing, just because they need to make sure everything's in line. And it's our role just to facilitate that. So we've got access to over 15 insurance carriers, most of which you've heard, you've seen, you use yourself. We just simply shop them through all of it and just streamline that home insurance process for them. No obligation. I feel like insurance agents sometimes get a bad rap, but we're not forcing anything on them. If they say no, we wish them well and we're on the way. But it's just a free look. We've got access to 15 carriers. We always have you as the referring agent in the loop throughout the process, just so you can kind of see where we are. But outside of that, Hal, what would you like me to hit on?
Well, let me ask you this, because you said that we need to have the evidence of insurability before we close, usually a couple weeks out before the closing date. The processors, the whoever's handling the closing is going to look for that. However, 2 weeks before the closing is probably not the opportune time for a buyer to reach out to you. When would be the best time for a buyer to call you and get a quote on insurance?
The best time would be once you're right out of the attorney review process. Reason being, we add a value that most insurance agents just choose not to, and that's referred to as a loss history report on the home. So throughout the quoting process, the last and final kind of factor of it is this loss history report. So I can see if claims have been filed on that home within the last 5 to 7 years. So it's helpful for you and your home buyers to have that early prior to the inspection. Reason being, if I see a water claim 3 of the last 5 years, you want to know if that claim has been fixed properly. The last thing you want is your home buyer settles on the home and they've got, a water issue, because the first phone call isn't to the seller. It's not to me. It's to you as referring agent saying, what do I do? So You just want to kind of make sure the home hasn't had any significant issues and there's no surprises. So we find that as an added value. The home buyers, it's the first time they're hearing of it. And again, it's just one more kind of added value for you to share with them. And it really makes, your process and your efforts and your systems really valuable and help for those future referrals.
But when we think about coming out of a return review, and that sets the clock running on a couple of things, one of those things is the home inspection needs to be done, typically 10 to 14 days. And so if we call you right out of review and you can do that loss history report, then the inspector can go armed with, hey, look for this, and make sure that there's a claim here that said a tree fell through the roof of the attic and punctured the roof. Let's do a double check on that and make sure that that repair was done properly. If the inspection's already done, that loss history report is pretty useless to you.
Exactly. And I think, it's unfortunate, but we're all not naive enough to know that, every seller's disclosure is honest, right? So we just want to make sure that we've got the interests of the home buyer in mind, to make sure that, their largest purchase of their lives is the right one. It's a suitable one. 9 times out of 10, we don't see any claims, but there are the ones that, it's a fire in the house, or they're away on vacation and they've got a frozen water pipe and it runs for a week. So there's just certain significant issues that you just want to make sure that aren't surprises later on down the road.
Yeah. Awesome.
And on that note, we'll also, so if I see a claim, I'll reach out to you as the referring agent first. I'm not going to run to the home buyer, freak them out. The whole intention of our service is an added value to you and the home buyer. So if you can work with the selling agent or the listing agent to see, hey, kind of what was this, what's going on, we can kind of approach the home buyer with exactly what the situation was, as opposed to, hey, listen, there's a claim here, what do you want to do? So I always go to you first, just simply because we're acutely aware that they're your valued home buyers and your clients well before they are ours.
So let me ask you another question, Tim. Is my experience with insurance, especially home insurance and even car insurance, it's a little bit like your cable TV bill. You know what you're getting when you order it, and then over time you don't think about it very much anymore.
Sure.
And then somehow or other, it seems like you got channels that you didn't expect anymore, and suddenly your cable bill is going through the roof. What is the benefit of reshopping insurances for maybe customers who bought in the past, or maybe some of us, to
Sure.
say, hey, Tim, I haven't looked at my personal insurance anymore. Is there any savings you can bring to me by reshopping my own insurance?
First of all, yeah. So first of all, all of us have so much going on in our lives right now. The thought of shopping insurance is I would hope for you, the last thing on your mind. It's not fun. It's not sexy to do. So it's one of those things that's out of sight, out of mind. For mortgages, most of the time, the home insurance is paid through escrow. So you don't even see it, right? So insurance industry as a whole, renewal rates increase every year. That's just the way the insurance world is, because they're factoring in claims, inflation, fires out west impact rates, on the East Coast. So your rates will increase year over year. It's just all depending about how much. So reshopping really is a significant factor. I can't. I'll share with you thousands of dollars I've saved some folks, and it's really not an exaggeration. So the longer you're with an insurance carrier, the higher the rates are. So it always helps to shop. Our advantage is when we place your home buyers with us, that's one of 15 or 16 insurance carriers. So if they circle back with us at the renewal and say, hey, listen, my renewal rate's up higher than I'm okay with, let's look at it. So I can reshop them in-house. I'm not losing them to somebody else. So that's the advantage of using us, the amount of options that we have, and the significant savings that we're able to find.
Tim, you were on one of our Ignite morning classes a month or so ago, and I don't remember who the agent was, but when you talked about sort of reshopping her own family's insurance, her car and her homeowner's insurance, you had saved her thousands of dollars, and I don't remember her name. Maybe you do.
It was Cynthia.
Was it? So the
Yes.
bottom line is, guys, if it's been a while since you had anybody look at your own personal insurances, no harm, no foul. Why not give Tim a call and say, look, can I do better? Right? And maybe you can, maybe you can't, but there's nothing that you're going to get lost by finding out. Now, Tim, Carnegie, it's the same name as we had Carnegie Title, Carnegie Home and Auto. Is there any connection with Bergen County Partners, and what's the benefit of us referring business to you for an agent?
There absolutely is. So we're in our 9th year now of establishing joint ventures with realtors like yourself. So I work solely with, your group up in North Jersey. So the whole idea is as the in-house insurance agent, it's an added value to your home buyers, but it's an also added value to you as the referring agent. So we've created this joint venture that is SEC RESPA approved, that allows for you as a referring agent to own shares and own opportunity or have opportunity in owning shares within that venture. We're now in our 3rd year. We're extremely profitable. We hit 104% return on investment in year 1. Year 2 was 116, and last year was 168% return on investment. So it's an investment opportunity for you, but also an added value for your home buyers. We want to make this, a win-win.
So let's talk about that investment opportunity, because I'm all about passive income and trying to find multiple income streams, right, guys? That's, to me, one of the things that we have to be very conscious of as we're thinking of our own personal net income is, where's this money coming from? Because in sales, if I don't go to sell a house today, do I still have sources of income? So finding a way to get passive income by owning parts of companies is a really good investment. Now, what's the requirement in order to be eligible to buy shares of Carnegie Home and Auto, which is a very profitable company? What's the threshold in terms of support that they need to show in order to qualify?
Sure. So we're going to look at, there's a fit test, if you will. The fit test is, one, are you as the agent, if you have access to the home buyers, and secondly, if you're referring them in the manner which we ask. So it's a minimum of 6 home buyers a year, and we can retroactively look at your last rolling year. So if you have at least 6 home buyers a year and you're referring those home buyers as we ask, you've got an opportunity at share ownership. We just had a share offering, I believe it's today. God, it's the end of April already. We just had a share offering last month, and so there's opportunity there. It's just a matter of whether or not you have the number of home buyers and you're referring those home buyers in order to have that opportunity.
I want to make sure that
qualify.
everybody's real clear about 2 things. One is it's home buyers, new home buyers. It's not reshopping my family and friends, right? It has to be new home buyers that you're representing the buyer in the purchase of the home, correct?
That's correct. Yep.
Okay. And you said referred in a manner that you prefer. What's the preferred way? Can I text you? Can I email you? Do I send smoke signals? What's the best way to do that?
Yeah. So as I mentioned, this is our 9th year of creating these joint ventures, and we found that the most successful way to lead to us actually writing the home buyers is that you send us an email within 5 days of being out of the attorney review, and you CC myself and your home buyer on that email. And it's a very warm intro. I can send the email to Hal, and he can forward it off to you. But it's just simply saying, hey, home buyer, this is our in-house insurance agent. He's got access to 15 insurance carriers. He can shop you, no obligation, free of any expense. And he can also show you this loss history. And that's it. That's all we ask for you to do. We go from there. And again, if your home buyers aren't interested, we wish them well and we're on our way. But that's really as simple as it is, just you sending an email within 5 days of being out of the attorney review
So
process.
do they have to take insurance with you, or is it just the referral? If the referral,
They do not. They do not. So the model is simply, we're confident that the carriers we have are going to lead to, writing enough volume that we don't need to require us to actually write the business. All it is just simply the referral.
All right. So benefits here now. Loss history report, if we call this in early, right? The goal is right out of attorney review. Let's not wait. We don't need to have it for the underwriters and the closing until closer to the end, but if we do it early, we get the loss history report, which can really give the home inspector something to dig into if there's something there. And 6 buyer side referrals in a year makes you eligible to purchase shares when there's shares offerings.
That's exactly right.
All right, cool. What questions do you guys have for Tim? I would, if you haven't, and again, it was Cynthia, I think is who it was in the last class, who had said it was thousands of dollars that were saved for her and her family when she started to take a look at having Tim rewrite their policies. If it's been a while, I'd encourage you to get off of this call and fire him an email and say, let's take a look at my own coverage. Can you do anything to save me some money? Again, it's and another thing for people that you've had past customers, or if you're newer, right? And you're just looking for a touch. You're looking for a reason to call your database, right? You've downloaded my app. What else can I do that adds value? Well, let me tell you, I was just talking to my buddy Tim at Carnegie Home and Auto, and how long's it been since you had anybody look at your insurance? Maybe you want to think about possibly getting reshopped and see if you can save your family some money right now. Who wouldn't be open to $1,000 or so of saved premium, right? All right, any other questions you have for Tim? Going once, going twice. Tim put his information in chat, so there it is. How's the baby?
Yeah,
Tim?
sorry. I know it's all types of insurance. I mean, with the referrals, I mean, I know it's first-time home buyer. But what else is this woman, Cynthia, saving on?
So it was hers was home auto, and I believe an umbrella policy. We like to write just residential because it's easy, and I can write 5 residential policies as opposed to a mixed use or something like that. But residential is really where we have our the successes. If you think of an assembly line coming from the Bergen County partners and realtors just dropping home buyers on, we're at the end snatching and grabbing. So it's the residential is 99.9% of what we write.
That's what I was thinking. Okay. Yeah.
Yep.
Although you could, and I know some people who have reshopped with you have said, look, what if we bundled my car insurance and my home insurance? And you said even an umbrella policy. So there's lots of different things that you can do. But for agents, really, the thing we want to be thinking of is when we're representing buyers, make sure your buyers are talking to Tim and talking to them early.
And then just the one thing here is flood insurance seems to be significant in our area. So I've got access to several private flood insurance carriers as well as FEMA. If your home buyers are using an FHA or VA loan, they have to use FEMA. But if not, the private the flood insurers are way more reasonable. So always have that in mind, just simply because I know flood insurance is it's an expense that a lot of people don't want, but it is something that we see a lot in North Jersey.
And quite honestly, I'm sad to say, with all the things that are happening with climate change, I just think you're going to start to see more of that as insurance carriers are just trying to find a way of getting enough revenue in the door to cover claims. I think you're going to start seeing the thresholds in terms of where they require coverage becoming, different, right?
Sorry, one last thing, Tim.
Sure thing.
So we have a rental property down in Monmouth Beach, which is definitely in a flood zone. We've had 2 instances since last 12 years or so. So you would look at something like that and see if there's another option for us?
100%. 100%. Yeah. Yep.
I'll reach out. Thank you.
Excellent. Thanks, Daniel.
All right. Tim, I appreciate you, man. Thank you for
Thanks
being
for your
here.
time, everyone. I appreciate it. All the best of luck.
Thank you.
All right, Tim.
Got
Be
it.
well.
Bye-bye.
And now an added treat. Jason Atchison from Bond Street Mortgage is here. And Jason, I didn't know that you were going to be here, but I'm thrilled that you are. because I was going to try to figure out what can I do to bring it home for the next 10 minutes or so to 7 o'clock. But with you here from Bond Street Mortgage, can you introduce yourself to folks who may not know you and talk a little bit about what you do as one of our affiliate partners?
Absolutely. I hope you guys can hear me. Don't be alarmed if my screen doesn't light up yellow, because I actually had to dial in from my phone.
Yeah, we see you and hear you well.
Good. All right. I didn't want it to be confusing. Yeah, so we're one of your in-house lenders, Bond Street Mortgage, been around since 2009, located in Paramus, licensed in 16 states. We're a direct lender. A lot of people ask, what is the difference between a direct lender and a retail lender? So retail lender like Bank of America, big box retail bank. The only difference between us and them is that they collect your payments. So we will transfer to a retail bank to collect your payments. That's the only thing we don't do. But one difference in our advantage is that we're way more specialized in terms of mortgages. All we do is mortgages, no checking, credit, debit accounts, nothing like that, just mortgages. And basically, if it can be financed, we can do it. We have an outlet for everything, whether it's, residential, commercial, construction, or renovation. Those are actually two different types of loans. Construction and renovation, not the same type of loan. So just make sure if you're talking to anyone about that, they understand that there is a difference, and get us involved early on in the conversation so we could help them understand. And we also do portfolio loans. So portfolio loans are for anyone that cannot qualify, let's say using their tax returns or W-2s. We're able to use different ways to get income for people. And
let me unpack that for a second, Jason. When you say they don't qualify, who would we be talking about then that with the tax returns wouldn't qualify them?
So let's say someone who's self-employed, business owner.
Like a real estate agent?
Like a real estate agent.
Oh, okay, just wanted to be clear. All right.
Exactly. So like, for example, real estate agents make a lot of revenue, right? But also a lot of expenses. So on your, you use your Schedule C, or if you have a LLC set up, you're not showing a lot of income for tax purposes. But if I look at your deposits into your bank account, I might see, a large amount of deposits on a monthly basis. Well, there are certain programs where I can use those deposits as opposed to going to your tax returns and trying to get the income from there. There are certain requirements. You need a 2-year history of self-employment, might need a CPA letter in some cases, but there are definitely ways to get things done that go beyond the traditional Fannie, Freddie, or FHA or VA guidelines. So we can help you out there. One thing I will recommend is, I know a lot of new agents with us today, right? So one thing I'll recommend is make sure your borrower knows how much money they have in their pocket before they go out shopping. You'd hate to be, just apply to your own life, right? You'd hate to be, you go all the way to the grocery store, you get to the cash register, you got, everything on the belt. And then all of a sudden you're like, oh, I forgot my wallet. I've been there. Terrible feeling. You don't want your borrowers feeling that way. And definitely you don't want to feel that way either. So I would say, best thing to do is set the expectations up front, make sure that they speak to your in-house lender. We're accountable to you. So we're going to make sure that we fully vet each person, and that, we know just to give you a heads up, a lot of lenders, they don't verify proof of funds. And, you might think, well, the person's not going to, try to buy a home if they don't have the money to buy it. It's not an issue of people not having the money or the cash for the down payment and closing costs. It's an issue of whether or not it's properly sourced. So that's something that we look at in detail, and we make sure that, that they're not wasting their time, you're not wasting your time, and that, we're securing the deal for you. That being said, one thing I also do for, a lot of new agents, right? You're going to be working with leads that maybe are not of the highest quality. at first, right? It takes time to really develop that. And what we do is anyone that you send over to me, I have a process in place where essentially I'm focused on turning renters into buyers. Now, and that doesn't mean specifically, it could mean renters, but you have people, right, that they have the motivation to buy, but they might not be ready. It might be because, you know, they have credit issues. Maybe they make a good income, but they're terrible at budgeting and saving. You know, there are a bunch of things that might limit them, a lot of constraints. They're also just mentally, they might just have, you know, those limiting beliefs like, I'll never own a home, or it's going to be too expensive. Those are the perfect people to introduce to me, because what we do, you know, the way that I look at myself is not just as a loan officer. I look at myself as an advisor. I want to talk to people. I want to have conversations with them. I want to help them. I have a team of resources. I work with credit repair specialists, financial advisors. Basically, if there's an issue with them qualifying, as long as they have the motivation, I'm going to leverage my resources for them. And I'm going to help them qualify within a certain amount of time. And then basically, if you're the one that referred them to me, in my CRM, I have a tag with your name on it. And as I help that buyer prepare, once they get to the point where they can purchase a home, I send them right back to you. So that's one of the value adds of leveraging me as your lender, as your in-house lender, is that I'm going to not only help you close the deals that you bring to me, the people that are ready, I'm going to help you build your downline so that I can help you grow your business and build a sustainable business for the future. You know, to me, that is the most important thing, and the most important value that I can add for you is to help put some money in your pocket. And then, you know, once we get some deals in the pipeline together, you know, we're going to make sure that we communicate throughout the entire transaction, that we make you look like a rock star, so that those people are talking to everyone that they know about you. They're referring more, you know, people your way, and then we're doing more business together. So that's the whole goal. And, you know, I just want you to not just view us as your in-house lender, but more importantly, your business partner. And I think it's really, you know, I'll be making some calls to all the new agents. So if we do happen to connect, or you happen to connect with someone from Bond Street, you know, please make it a point to stay in contact with them regularly and build that relationship, because at the end of the day, that's what it's all about, the relationship. So
Yeah.
Thank you guys for your time. Hal, I hope I wrapped
What
it up.
questions do you guys have? You know, let me just throw another thing out here, guys. I just want you to hear, you know, we purposely go out and we build relationships with select groups. Any loan officer, any mortgage company can do the pure vanilla, the easy layup shots. Anybody can do that. What you need is a partner who can handle the complicated ones, right? And so when Jason talked about portfolio lenders, these are separate investors who are willing to take on riskier products that pure vanilla lenders won't touch. And so, yeah, not only can Bond Street, Jason can do the easy ones. Anybody can do the easy ones. Where you really have benefit is not only that, but is the hard ones. We can do those as well. If it can be financed, they can do it. And the relationship, that's the name of the game. And so the purpose of tonight was really about, how do you build out your team, right? How do you build out your core group of people that you can kind of have in your inner circle? I've got my lender, my preferred lenders. I've got my home warranty company. I've got my insurance guy. I got my title guy. You build out your team of people that you know that you can count on and that you can trust and you can rely on. Your life is going to get a whole lot better in this industry. I can promise you that. Can promise you that. What questions do you have for Jason while we have him here for a few more minutes?
That was great, Jason. Thank you.
Thank you.
I'm going to send someone your
ask the
way.
obligatory interest rate question. Where are they today? Where are they going?
Interest rates. Actually, they've been down the last 2 weeks. Over, you know, the last 6 weeks prior to that were just brutal. So they have come down a little bit. You know, low threes for qualified borrower. The problem right now is still on investments in second homes. Those are still really, really tough in terms of rates.
And when you say tough, what are we talking about?
points. You're paying points to get a you're going to pay points to get a rate on an investment home right now.
Okay.
In most cases,
Right.
multifamily investment, single family, you could probably get pricing, you know, in the 4s without paying, you know, any points. But multifamily
Because just to
investment,
understand that, what do you understand with
Tough.
these kinds of the economy being what it is? Yeah, we've got vaccines. We're trying to get back on track again. But if it's going to be your second home where you're not living, if something happens and you can't work or the economy doesn't recover as fast as we hope that it might, you got to make a choice. Where are you paying? Which mortgage are you paying? You're going to pay the roof over your head, not the investment property. So we know the lender's going to say that's riskier for us. It's going to cost you more money, right?
Yeah.
You get it? Hopefully the economy will start to stabilize. People will get back to work, and those rates will start to be more competitive as well. Right?
absolutely.
Jason, can you put your information in the chat, please?
Oh yeah,
Go
absolutely.
ahead and do that, guys. So we had 4 great people for you to talk to: Brian Allen, Carnegie Title; Bill Thompson, 210 Home Warranty; Tim Fox with Carnegie Home and Auto, and now Jason Atchison. You know, great partners here, guys. And so what I would say is build your team and be ready for anything, right? So I hope this was of value tonight to kind of have an opportunity. Here's where we're going to go tomorrow night. Tomorrow night, we get a real treat. You're going to hear from Carol Lee Chirico and Randy Douglas. Where are my Woodcliff Lake people? Any Woodcliff Lake people in the room? Randy is your broker. Carol Lee, and they've worked together for a lot of years. They're going to talk about the real estate contract. And I don't know whether Patty's going to be able to join tomorrow night or not, but you're going to find there's nobody better to talk through real estate contract questions than Carol Lee and Randy. To just salt of the earth people, love them to death, and they're going to be here with you tomorrow night to go through the contract stuff and to answer any of your questions that you have there. So if you can come on back tomorrow night and be part of that, we'd love for that to be the case. And in the meantime, this has been recorded. It will show up on the Bergen County Partners YouTube channel probably later on this week. And appreciate you guys spending Monday night. We'll talk to you soon.